Hello there, this is Bruce at Fleet Capital Management. It is Saturday morning, July 8th, 2023, and we're going to take a quick look at the market. It was a weak market last week, actually for the last 2 weeks, but that was to be expected, and I'm going to show you that. And then we'll take a look as we start this second half of what is turning out to be an excellent year. We'll take a look at what the charts are showing us. The video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell the security. Please subscribe to this YouTube channel. Also, if you have any questions about the video contents or anything else, you can always reach me, Bruce, at fleetcapitalmanagement.com. The homepage of our website, fleetcapitalmanagement.com, 2 buttons on the right. The bottom one takes you to our most recent market analysis videos. The top will schedule a Zoom call so we can talk privately. So let's go over to our matrix, which is where we start every day. This is updated each day. This is updated for yesterday or Friday. Excuse me. For Group 1 accounts, which we use daily indicators, we're still in an up position. For Group 2, where we use weekly indicators, we're in an up position. And then, as I will show you on the charts, our daily moving averages are still in a very bullish configuration, 20 over 50, 50 over 200. And our weekly bear market avoidance indicator, if you will, is at 10 over 20, which is, and I'll show you these on the charts. This is a very bullish situation. And the reason I'm stressing this is because we've had a week 2 weeks, if you will, but that happens even inside a bull market, which I think you are starting to understand. So here's the S&P 500 on a daily basis, and what I have put on here is actually I've added the 8-day, which is the white, and then we have the 20 is over the 50, and on another chart I'll show you the 50 is over the 200. The 20, the 50, and the 200 are what I show you on the matrix. The reason I have the 8 on here, this is a very short-term moving average, but as long as the 8 is above the 20, and it's a pretty strong sign and a continuation to buy. It has curled over a little bit, which it's done before. I'm just going to watch over this next week and see if it comes down below the 20. If it comes down below the 20, that's not a terrible thing. Really, a correction is when the 20 is below the 50, but a pullback, which I believe we're in, could be part of that. So that's the only reason I have the 8-day on there to show you. I'm going to take the 8-day off, and we're going to start to look at a couple other things. Before we do, back in this area, which is now 2 weeks ago, I had mentioned that we were above the linear regression line, which I'll plot in just a moment, and that a pullback was expected. It happened exactly as we thought, but then we had a nice little bounce, even with this gap here. But then this week we seem to be pulling back again. But you know, this doesn't mean anything. This could just be a sideways. Remember, consolidation. The market can go up, it can go down, and it can go sideways. Interesting little pattern here, but it just looks like a normal pullback consolidation to me. Let's add our Hull ribbon, and the Hull ribbon is like a moving average, but it's faster. And you can see here that it turned back up before the 20 went back up above the 50. So what the Hull does is it gives me an indication of what's to come over the next week or two. You can see here the Hull went down long before the 20 crossed below the 50. So it's a faster moving average. And again, it's just another way to look at the market. And right now it's saying that the market looks like it's okay. If we put on our super trend, which are ATR, average true range dots, you will see that our price is still above. I use these for stop management more than anything else, but it's also a good indication of the trend. If the price can stay above those ATR dots, generally speaking, we don't have anything to worry about. If I put on some of our order blocks, remember, these are orders that are sitting in the system. And when it is 20% or more, they're considered reasonable or significant order blocks. If it's below 20, like this one's 13, that one's getting ready to expire. So the price is staying above our order blocks. Sometimes the order blocks will act like a period or an area of support, and there's our 20-day moving average. So now we've got 2 areas of support. We call that confluence. So the price might come down to the 20 or down right about to this order block and then continue up. We'll see what happens. And then I can also add this yellow line. Actually, I'm going to take that off. I don't want that to confuse you, but that's just called a trend catcher line. And that's something I also use for trading. If we look down here to the ADX and the DI, the ADX is this white line, and as long as it's above this 20 line, that means that whatever trend we're in, and right now we're in an uptrend, is still considered fairly strong. It has been weakening, as you can see, over the last couple of weeks, along with the price and this normal pullback. So the bottom line is everything on here looks pretty good to me. We have not been stopped out of any securities recently. We're a little bit close on a few of them. Remember that I'll just pull up a random security. Here's Avgo. Here is our stop right here. We've got plenty of room. Even though the hull is down, that can always turn back up. We're above the 20-day moving average. We're above the ATR dots. We're clearly above the 50. So everything looks pretty good. Let me just see one more. Here's Builder. Builder's been bouncing around a lot lately. We have our stop, which is above our entry, significantly above, and we hope that this just continues up. So if we do get stopped out of security, well, we get stopped out of security. We can always go back into it, but hopefully we won't, because we've got a really strong basket of stocks. Speaking of those, if I go over here, this is just something I use. I use this to help me find stocks, but I use this page to kind of track the holdings that I'm in and how it's doing relative to the S&P 500. And this is since January 1st of 2023. This blue line is my stock picks. This gray line is the S&P 500. This is only updated through Thursday. On Monday, I'll get it through Friday, but you can still see we are outperforming the S&P 500. We have some pretty good stocks here. If you look at this gain column for our stocks, what this is saying, and this does not include Friday, Avgo's up 40%, Builder's up 42%, and so on. Schwab is now finally starting to move. We've got some very respectable gains in here. The one that hasn't performed yet is probably ServiceNow. It is positive. We'll see what happens. It's a really high quality company, but everything else, we've got some pretty good gains, and we want to protect those gains. So that's what I use this page for. If I go over here, this is my go, no-go charting platform. On the right-hand side, this is the daily S&P, and on the left-hand side is the weekly S&P. And I take a lot of what I put on my matrix off of here. On the daily, you can see the 20 is above the 50 is above the 200. If I go over to the matrix, that's where it came from, right there, okay? And on the weekly, the 10 week is above the 20 week. And what that looks like on the matrix is right here. That's why it is green. So again, everything looks good. This is just a momentum indicator. It's been falling a little bit. What is normal in a bull market is it will fall down to the zero line as it did here, and it'll bounce. It'll fall down to the zero line and it'll bounce. We'd like to keep it above the zero line. Every once in a while, it'll dip, but a strong bull market, it comes right down to the zero and it bounces back up. So that's what we have been seeing in the market. Again, our stocks are doing well. We have some very strong gains. Our stocks are outperforming the S&P 500. All of the indicators are still in a bullish configuration, which of course we love to see. The market has been a little bit weak. Was Monday, Monday, Tuesday, Wednesday, Thursday, Friday. The market closed on Monday up here, and it closed on Friday down here. So it is just a little bit lower, nothing terrible, normal pullback, normal sideways action. And it is that way until it's not, until we see something on the chart that tells us otherwise. But right now, the market looks good. Seasonality. Markets generally have a tough time in parts of July, August, September, those summer doldrum months where traders sometimes are out on holiday. The volume tends to slow down, and when volume slows down, it makes it easier for pullbacks to happen. Don't be surprised through the rest of the summer, and of course we'll look at this every week, but don't be surprised if we have some choppy action over the summer. That's possible. And if it just remains sideways, and I'm not saying this is what's going to happen, but if the market is choppy up and down, but remains in a consolidation or sideways, even through September, that would be a very, very strong indication of a powerful rise towards the end of the year. So remember, we really care what happens over 6 months, over 3 months, over a year, especially. What happens on a daily or weekly basis is just part of the process. So don't get fixated on what your account is doing on a weekly basis, because this is all very, very normal in an uptrend. Okay, but we will stay on top of it. We'll watch it every single day. I know that I have some stocks to purchase for Group 2 accounts after the liquidation of many of the defined outcome ETFs. That's going to come a little bit of weakness in the last 2 weeks. So I'll probably start to add those stocks either next week or the week after. There's no rush. This is a difficult time. This is a consolidation time. So we want to wait before we add any new positions to our portfolio. Okay, I hope that helps. It's been about 16 minutes. I'm trying to keep these short. If you have any questions, just let me know. I'm always here, and we have not done reviews one-on-one for most of us in a while. If you're watching and I have done a review for you recently, well, that's excellent. For those of you who have not done a review, reach out and let me know if you'd like to. And as a matter of fact, now that we've finished the first half of the year, I may be reaching out to you to schedule one just to take a look at your account and make sure everything is going the way it should. So you may get an email from me in the next week or so asking us to schedule a convenient review. And there's no urgency. It's just to kind of make sure that we're doing what you expect for your account. So that's a story. Have a wonderful weekend, and we will be back together early Monday morning. Bye-bye.